The weather of the stock market is changing, and big money needs you to FOMO into this rally. You're watching the Stock Market Brief Show. My name is Michael Silva. Look, in yesterday's video, we discussed different trading strategies and how to handle different environments. Today's video, I'm going to be going into the weather forecast of the stock market. However, before we do, I want to really bring up an analogy of how you can think about your trading and trading as a business. So we're going to be getting right into today's episode. Have you seen the movie The Pursuit of Happiness? If you haven't, it's a great movie for one, but one thing that I want to call out is he started a business, and his business involved selling this product, this scanner right here. Now, as you know, he bought a bunch, if you've seen it, you know, he bought a bunch of these scanners. They were excited for it, and he had only one product, and he had one strategy to sell all of those products. Now, this is why I want you to think about this when you're really thinking about trading as a business. And business or trading is definitely a business. You're in the business of risk managing. Okay, so when you are buying and selling stocks, think of it as like a retail storefront. Okay, this is your business. And in your business, you're going to hold different types of inventory and so forth, and you have strategies on how to sell that inventory. Maybe you have some inventory up front so your customers see it and they come in. Okay, however, in the example of The Pursuit of Happiness, he had one product. He had product X right here, and he had, only one strategy to sell it. So what happens in the case where if you only have, this one strategy and the weather's changing and you only have one product, well, and the weather changes, your customers do not want to buy this one product. Well, chances are you'll go out of business, okay? And you might be thinking to yourself, well, I know plenty of people that trade one stock or one equity. There's a big difference between trading one equity, right? Crocs is a business that sells typically one product, but it comes in various different colors and different strategies in order to sell it to, from, a younger age all the way to an adult age. So, if we take a look at it in this way, your business here, you might sell or you might only trade the SPY, right? Or you might only trade the Qs or the IWM. You might only trade options. But here, as you can see, your inventory, right, might be not different stocks. It might be different strategies in different environments. Okay, so I want you to think of it like that. We'll get into what it might look like if you have different stocks too. But the business of trading is all about risk managing and moving inventory in and out. If you're not moving your inventory in and out or adapting to the different changing environments, well, your business, like I already previously stated, will go out of business. Now, in yesterday's video, we discussed different trading strategies in different time frames. Okay, so for example, I posted this out on Twitter today because I knew that I wanted to follow up on it. I pointed out that, hey, we have that 5-day moving average inclining. This was the 15-minute time frame. Okay, we talked about it on even a lower time frame, and we talked about it on a bigger time frame too as well. But price action was pulling into it, and we started to see a subtle move get into it, right? The 15, we did a U-turn, and you can buy the U-turn coming out of it. And then I pointed out this, right? We had a couple of days on gap downs. We saw price action kind of go down, but then we saw these breakout moves. Okay, so I wanted to point that out. And then people that were paying close attention, right, on the shorter time frames, right? This is a 5-minute. We talked about the daily VWAP. Okay, and when price action gets back above the daily VWAP, what happens? Well, so if you're all paying close attention, I also sent this out, price action trying to get above it. A simple strategy here is entering on the confirmed breakout and have a stop loss set on the previous swing low. And then we had the FOMC minutes come out, right? That was a little bit later in the day. But that means a stop here and you play the breakout, right? So, a lot of people say I'm either bearish or I'm bullish, right? Well, the thing is, weather is different on any single equity that you trade. The weather is different on any time frame that you trade. So if people are looking for just, hey, are you bullish here or are you bearish overall in the market? I can already tell just by that type of a question that, you got some studying to do. So what happened here after this point, after that VWAP breakout? Well, price started to consolidate a little bit more and it held above it. Now, when price consolidates like this, it'll allow you to up the stop loss. And as you can see here, we upped the stop loss to right around here. Okay, and then wanted to see where price can potentially go from that point. Well, a final note here is you can see at the end of day, price did break out and moved up a lot higher to close this gap or just about close that gap. And then that was on the FOMC minutes. And then we started to reverse, still closing above that 5-day moving average. So if you traded this, right, and you paid attention and then you noticed areas of resistance right up ahead, you could have played the pop to the upside and caught it on the smaller time frames. Okay, so that is all about adjusting kind of to the weather or to the time frame. Now, Another way to look at the business is having, potentially trading all types of inventory, right? So you might have, stock A, stock B, C, D, E, F, G, H. Now, the thing is, what happens if customers don't buy these three stocks, right? What if the trades are going against you? The strategy or the ones that you picked out aren't working. Well, you need to remove the inventory and you need to look to re-add new inventory. All right, that's how that works. And if you're not constantly flowing and moving through it, you can get caught up in a trade. If something goes against you, right? If these no customers are buying it and you have them here on the front, display of your inventory shelf, and they start going against you and you start losing a lot of money and you still don't cut these losers, well, guess what? They're just going to collect a lot of dust, and unfortunately, it's going to drive your portfolio most likely significantly down, if not potentially out of business. Okay, so when you think of trading, think of it as your business, right? So always constantly try to move inventory around. Another big piece here is, never get too obviously big on one single trade. If you're trading stock A and you're like, hey, no, if I make this one huge trade, right, I'm going to make a lot of money. Okay, cool. So, a customer walks in, they say, I'll buy that. Okay, cool. You sold it and you made a lot of money. But what happens, if you keep doing that, there's going to be a time where you buy a product and the customer does not want it. And it's going to be hard to sell because you're at a loss. And then guess what? You go right out of business, okay? So you need to be very strategic in how you handle situations. For me, for example, when I short the markets or individual equities, my short position is max 3% most of the times. And typically it's less than this. And I typically build into the position and trade around it. 3% is about, let's call it 300 basis points. However, a long position could be 600 basis points, and that's in equities. But if you even take it a step further, okay, what about lower beta products like bonds? All right, so individual bonds might be, 1,000 basis points or 10% of my portfolio. Okay, so you got to think of that in terms of a complete business. If you don't have a strategy or a breakdown like that, I would recommend for you to just take some time and start to structure things out like this if you want to survive in this game for the long run, okay? So, yes, you have your business, you have your inventory, you have everything set up. Now you got to constantly check on the weather, right? Sometimes it's stormy and rainy and your products might not be doing too well. However, it might turn sunny very soon, okay? And how do I look at the weather? Well, I always pay attention to the weather via signal charts, via indicators. It could be moving averages, it could be, breadth, volatility, whatever the case may be. All right, so if we take a look here, okay, what's been really sunny? Well, the markets have been sunny. Apple has been really sunny, all right? But how do we know if the weather's changing? Well, we can notice that we have some overextended areas, right? The MACD's kind of curling down and it's coming up, filled this gap into a prior area of supply where this prior rally came into. So yeah, it's sunny, right? The weather is sunny, but we are coming into an area where we might need to pay a little bit closer attention. And even on another level, which I don't have this on the chart, it tagged its upper weekly expected move. All right, so that's the analogy. That's how I want you to think about trading and adapting in each individual environment, because I've been getting a lot of different random various inquiries and just a bunch of trolls that don't quite understand, you can't just be bullish or bearish. You need to understand at a deeper level how to navigate these financial markets. So let's look into the weather. Let's see what's going on in the markets and come to our conclusion of how to navigate this, what's taking place. First and foremost, let's take a look at the buy and sell signal. We got a buy signal, right? This hasn't actually updated, but it updated. It'll update a little bit later tonight. You can see here the put to call ratio is at a pretty low point, typically marks some types of short-term tops, but the buy signal triggered and we had a little bit more of a rally. It triggered over here. We had more of a rally. We're still on an active buy signal, but it doesn't tell you how high it's going to go. All right, we had a buy signal here and it continued off 4 or 5 days. Here, 4 or 5 days too as well. Okay, cool. So we got a buy signal. What's the volatility looking like? Well, volatility has been trending downwards, but if you actually scope out and look at a bigger time frame, volatility is still putting in higher lows at this particular time. And now it's kind of floating around this, 1950 to 21 level. So as it stands right now, volatility is subsiding, which could be potentially good for the market overall, but we got to pay attention at other things to see what could potentially change here. Now, more weather, let's take a look at just overall breadth of the market, and we can do that by looking at some of these bullish percent index charts. Okay, we're getting overextended on the RSI. We have 7380. We've been pointing this out, so I'm not going to dig too deep into it. Sorry if you're new here, but I'll get into it a little bit deeper on other episodes. But the S&P 500 bullish percent index, negative divergence forming, and the RSI is getting a little overbought. What does this mean? It does not mean to short the market. That's not what this means. Could you be successful in doing that? Yeah, absolutely. But you need to understand what time frame you're trading and how to do that. And we'll talk about that in another, a little bit later, actually, on the smaller time frames. Okay. If we take a look at the NASDAQ Composite bullish percent index, also negative divergence. It's overbought. If you take a look at the technology, right? We talked about this negative divergence yesterday. It's no longer overbought, but the divergence is somewhat playing down right now. If you look at energy, negative divergence. Financials, getting pretty overbought. If you take a look at the discretionary, negative divergence. All right. Then let's continue on a little bit deeper. What about the Saylor to Schiff tool, right? What's this right here is really looking at, high beta and low beta, and it's measuring and mapping the rate of change between these two assets. And as you can see here, it's at 0.43, almost crossing down through that zero line. Zero's down over here, and if it crosses down through the zero, it could potentially activate a sell signal. A sell signal is something that, when it crosses down and closes the week through the zero line, and then the price of the new candle gets below the prior low. And you can see here we've seen significant sell-offs in the price of Bitcoin, but also we've seen other individual crypto equities and even the financial markets like the NASDAQ Composite follow, because they do have a pretty tight correlation with one another. Here's another one right here. So what's the weather look like? We had the rate of change cross down through the zero line today, which doesn't mean there's going to be a crash, but I want to point out what has happened in this weather before. Well, when this takes place, we've seen periods of consolidation and little pullbacks. We've seen steeper pullbacks. Basically what it says is, hey, is right now the best time to buy? Probably not, right? Right now, if you are going long, you might have to look at the smaller time frames and tighten up your risk if you want to play the continuation of the trend. If you're just blindly entering in, knowing this information, you could get caught off guard. Like many people were probably caught off guard today on just a subtle move to the downside, which it was subtle for the most part. Okay, so yes, the rate of change here is crossing down through this, and now we might have to wait to see what happens if it crosses back up through it, because when it crosses back up through it, that actually has pointed out some really good rallies in the NASDAQ. Okay, and if you don't know what this indicator is, it's measuring growth to value and the rate of change between that. I'm just showing the cues where the relative strength line is actually invisible. Let's take a look here. Here is a divergence that is currently trying to build out. It's not fully developed, but I want to point it out anyway. Okay, up top is the ratio between the S&P 500 and TLT. Down below is the S&P 500. Okay, we're using SPX as the proxy. When the ratio puts in a higher high, but the S&P 500 puts in a lower high, that right there could be a potential bearish divergence that plays out to the downside. And you can see here highlighted, the market went down to the downside. Here it went down to the downside. Here it went to the downside. Here it went down to the downside. So what is currently building? Well, on a bigger time frame here, we have a high and a matching high. This isn't quite breaking above it, but there is somewhat noteworthy that there is a big divergence here as we have a much lower high, which could signal something potentially to come as we've seen prior. So it's not actionable trading advice, but it is something to tell you, hey, the weather may be changing, and we've pointed out on all of these divergences prior. Okay, how is the overall daily chart looking? Okay, let's take a look at the weather. Well, the 200-day moving average is declining and price action's running into it after already a very strong move without digestion. If you add on top of that, we also have a descending trend line right there too that price is coming up to. RSI got a little bit overbought, but it's working out of that. So we have strength, but we're also coming into a very important level to test. So what does this mean? It means exactly what we've been saying, right? Is this the greatest time to buy, or would it be better to see how price digests first? Okay, should it consolidate? Should it pull back? Should it break out and then back test and something like that? There's all kinds of different possibilities. You have to just say, what if this happens? Or if this happens, what will I do? And if that happens, it's all if-then statements, right? If you take a look at the 15-minute time frame, the 65-minute time frame with the 5-day moving average on it, the price action of the 5-day moving average is still inclining, meaning that's in a shorter-term markup, right? We have stage analysis, right? Accumulation is stage 1, stage 2 is markup, stage 3 is distribution, stage 4 is decline, and then it repeats. You can see here was accumulation, bam, markup. Okay, are we going to be moving potentially into a period of distribution where we see wild swings? And then the 5-day moving average would just go to neutral. And if that's the case, then what happens if you want to short to the downside and you're trying to be patient on this time frame? Well, you wait for the 5-day moving average to start declining and potentially do something like this, right? So it comes down, this will flatten out. Here, I'll draw it out with purple. Okay, if it goes like this and then price action, comes out, tests it, maybe breaks out, boom, boom. And then you all of a sudden play the breakdown with a stop here or a stop there. Okay, that's what that would look like from this perspective on this time frame. If you take a look at the Qs, what are the Qs doing? Let's take a look at the weather. Still below that 200-day moving average. Very strong move into a descending trend line. So yeah, it's sunny outside, right? Everyone wants you to see how sunny it is. But if you look at the forecast, okay, what does price action do after a typically strong move into an area of resistance? Well, it typically consolidates, sells off, pulls back, digests, something like that. Okay, MACD is also showing a little bit of weakness. Boom, and the RSI is starting to point down too. Okay, so continue to monitor this, continue to see what happens. You might be thinking, and we talked about this yesterday, okay, where if it pulls back, you might need to know a level of interest to start going long if you really believe this is the bottom. And yesterday, we talked about this right here at 395 to 400 being a good level because the rally really actually kicked off right here on these three bars, the boom, boom, boom to the upside. And you could see that with the volume acceleration too there, how it picked up. So if price comes all the way back down, you know, that could be a very good a level of interest to pay attention to see some sort of a pop. Okay, if we take a look at the 65-minute time frame with the Qs, okay, what are Qs doing? Qs actually closed beneath the 5-day moving average. What's the 5-day moving average doing? Well, it's still in that stage 2, still pointing up at this time. So does that mean short right here? You know, the probabilities aren't all too amazing. We can get lucky and it could just just break down. But, you know, my opinion, if you want to risk manage a little bit better, what you'd want to see is the 5-day to start curling itself over, right? Starting to go to neutral. And then you want to see something like the price action do something like that, where you can start building out, you know, have a better risk to reward and play the breakdown if we start moving into that declining phase. Take a look at IWM. Also, very strong move. It's been holding above the 200-day moving average for a couple of days, but it did break down today, right? It's getting overextended. You know, the MACD has been kind of flattening out. It's starting to curl over a little bit. You can see this break here was actually on higher volume than it's been in the last 4 or 5 trading days, indicating that this could be the start of a distribution type move where we get some follow through the downside to start to digest, start to flag, start to do something at this given time. And you can see if you just look to the left of the screen, you have a lot of price action here, right? And there's a big volume profile right here. So it's likely to see price chop around, digest, or hit into an area of resistance at this given time, okay? If we start breaking above it, right, as we're coming into the lower weekly expected move, if we start breaking through these levels, then we can start looking at this volume node right over here, this volume shelf right at about 220, which would be absolutely incredible move, 215 to 220, right? There's not much volume traded between that. So that little air pocket, right, we can act like magnet, go right up to that level if that's actually the case. All right, let's go ahead and look at the smaller time frame, 65-minute with the 5-day moving average. We got a break, right, of the 5-day moving average, and look at, it was a gap right down through it, came back to back test, it acted as resistance, then sold off right there. What's the 5-day moving average doing? It's still inclining at this time. So if price action can, you know, hold and trade sideways, this might start turning around and give you a better risk to reward entry to take it from the short side, okay? Another thing to look at as far as weather goes is the dollar. We're currently flagging. We're currently breaking out. The S&P 500 moves very strong when the dollar broke down, and she's done that many times. However, if the dollar starts, you know, moving at a rapid rate of change to the upside, well, the last time that happened was right around here, boom, to the upside, and the market sold off. And if you look at a longer time frame, boom, it's been trending up, and the market has been trending down. So it's an important time to keep an eye on the dollar, keep an eye on bonds, etc. That's really all I have for you on today's episode, everybody. Really quickly, I can go over the zones and notice something that I am doing. This is something that I share with my Patreon community. I don't have it listed as one of my benefits because it's something that I'm still testing and writing notes about. And you can see that actually in the zones channel, where I post also the S&P 100 zones, where it gives you a good idea as far as risk management goes. It shows you upside to potential downside. It shows you the midpoint, and the midpoint has acted like an area of support or a trend line. Okay, if you've never seen this before, right? It's $9 a month. You can enter in. You need Discord to sync to Patreon. So once you get in, you sync this to Patreon. Now, if you do the $9 a month and it's August 17th, Patreon charges the 1st of every month. So just know that if you do this now, you get charged again on the 1st. If you want to avoid that, you can just do sign up annually. You'll also get a 16% discount. Ends up being like $90 US, and then you get obviously the my watch list. Typically every week that I update, you have my trade ideas that I'll post in there, giving some ideas for some setups. You'll get weekly expected moves of about 40 products that I list out in a PDF and Excel. I have the zones right now, but I don't have that here as a benefit because, I'm still testing it, like I said, and then you get access to the community too as well. So one thing that I want to call out here on the zones is a lot of the upside to downside is starting to neutralize, meaning that it's almost, a 1-for-1. We were seeing, very minimal upside and a lot bigger downside, but now we're starting to see them even out. And as it stands right now, like say if I look at something like the S&P 500, shows 2% upside at the current zone reading, 4.2% downside. So it's still a 1-for-2. There is downside, but if you look at the close at 4274, okay, and then the mid is 4227. So you can see here that we're still above this midpoint, and this midpoint, if you've seen this and you've been tracking this, these midpoints have been acting as an area of support. So as it stands right now, they could simply bounce off these levels, or if you're shorting, you might want to think about covering there. But if they start breaking those levels, then we'll start noticing the downside minimalize and the upside start to maximize again in these zones. That's all I got for you. Like I said, on today's episode, everybody, have a wonderful night.